Good morning, traders. Hello and welcome to today's morning market call. My name is Ian Elkington, market analyst at HFM. And as per the title of today's session, we shall be looking at smart money positioning. Last week, as we are anticipating very important news released by the DEM non-farm payrolls. But first and foremost, I would want us to familiarize ourselves with the disclaimer that states the information herein is only meant for educational and informative purposes only and should not be construed as investment advice. Trading the financial market does carry a degree of risk, but don't worry, I'm here to help you look at the markets in the right way. Now, ladies and gentlemen, our pit stop tours are resuming this particular week, and Eastern, it is your time, whereby tomorrow we shall be in Kitengela at the Sandalwood Hotel. Then we shall be off to At the River on 6th of May at the Pride Inn Signature Mall. Then Water Kenya, we are coming your way on 7th of May at the Kelvin Hotel. Then Kitui on the 8th of May at the San Marino Hotel. And then finally, we shall be concluding the Eastern Pip Stop Tour with Machakos on the 9th of May at the Tetot Hotel. If you're around any of those towns, purpose to attend, we are going to have a very interactive sessions and we are going to have prizes to be won as you do have an opportunity to interact and network with the biggest traders in Kenya. How will you register for the sessions? You will want to go to the HFM events page. Now, if you just open a browser of your choice, then input HFM trading events in Kenya, then it shall take you to this page. Or if you look under the tools and dedication, we do have the events page over here. Now, if you are around Nairobi, we do have the physical classes, which is going to begin today on 4th of May, shall conclude on 8th of May, and it is a recurring Monday to Friday session. If you are in Kitengela, you would want to click register now for Kitengela. Fill in your details, book your slot as early as possible, as we usually have the limited spots available. Now, moving over to the morning market call. Smart money positioning. What do we mean by smart money positioning? Essentially, we shall be looking at the commitment of traders report, which is a official government website of the United States. And usually institutions are mandated to update their positionings on this particular website each and every week. Now, the data is usually updated on Tuesday, but made available to the public on Friday. Now, how do you look at this information? You just input cftc.gov. And once again, ladies and gentlemen, you're going to have an opportunity to look at the commitment of traders. Now, you would want to go to market data and economic analysis, then the commitment of traders report. Once you click on commitment of traders report, it shall take you to a new tab whereby now you have an opportunity to look at this data on a deeper level. Now, let's take, for example, you want to focus on gold. You will want to go to metals and other formats, and then you will want to go to the short format under the futures. Why the futures? Because futures usually have a clearer direction on the markets because traders are mandated to cover their positions after the time stipulated as end. Now, once again, you click on the short format, it is going to open a new tab and then you have this data. Now, at first, it could look a little bit complicated, but don't worry. After this session, after this morning market call, you are going to get a deeper understanding of what it means. Now, let's take, for example, we want to focus on gold. You would want to scroll down to where gold is, and this is the commodity exchange. This is COMEX, essentially. We shall be looking at the CME. Why the CME? Because the Chicago Mercantile Exchange is the biggest exchange in terms of derivatives in the United States of America. Now, it is usually disaggregated into four main categories, whereby we have the producers, the merchants. These are the people who are in charge of removing the precious metal from the ground. And then we do have the swap dealers, but we want to pay attention to the managed money. These are the biggest speculators in the markets. Now, when you look at these, you have the long format and then you have the short format. Longs are essentially buying positions and shorts are essentially selling positions. Now, if you look at the net positions that they do have, we do have a total of net long 122,000 positions, meaning institutions are net long on gold, and we only have 32,505 net short positions. But for me as a trader, for me as a day trader or an intraday trader, I would want to pay attention to the changes, specifically from 21st of April till 28th of April. This is how institutions position themselves. We did see that institutions offloaded negative 1,424 net long positions, but at the same time, they did add positively to short positions. Now, what does this mean? When you see a negative number on the commitment of traders report, it means institutions offloaded their positions. If they were buying the markets, it means they were covering their positions, meaning they were selling back their buying positions, but at the same time, they did add to selling opportunities. Now, we shall reflect on a chart of XAU USD. What does this mean? But I'll just want to touch on it right now, because if I pull up a chart of MetaTrader and then I pay attention to XAU USD from 21st of April, which was this particular region here, till 28th of April, which was the closing price of this particular day, we did see the markets aggressively move to the downside close to 4.82%. And this is the reason why gold did move to the downside. It is because institutions now were covering their net long positions. Whatever they are buying, they are now selling into the markets and they are adding more onto selling positions. As a result, we did see prices of gold move further to the downside. Now, how can I use this information to make ideas, to generate ideas in the near future? Usually, you would want to anticipate volatility spilling off to the next week, whereby we ask ourselves this question: if we did see an impulse last week, what are the probabilities that we might anticipate another impulse this upcoming week? Now, reflecting on gold prices, we did see prices now having a crossover just after the commitment of traders report was started to be published, where the 200 period moving average went above price, the 50 trades now below the 200 period moving average, and we are seeing price action trading well below the 200 period, signaling that yes, indeed, there is selling pressure in the markets. Now, we did have this region of support forming around 4,669 for the entire period of last week, which was broken to the downside on 28th of April, massive impulse to the downside, and then we had a correction back into the upper side. Now, a region that was once support was broken to the downside, now is acting as a resistance, potentially for prices to continue moving further to the downside. We do have this trend line bouncing off 29th of April. And we also did see on 1st of May, this was last week on Friday, whereby prices did tap onto this particular region. If we do happen to have a clear breakout to the downside, I would anticipate gold prices potentially taking out 4,500 mark in the near future as a result of now institutions, traders, and investors looking at the risk on sentiment in the markets, where the stock markets is performing better and gold prices usually tend to sell off during such times. As a result of gold, once again, is not a yielding asset. Now, going back to the commitment of traders report, you can look at all the assets that you can possibly imagine. When you look at gold prices, you do have the commitment of traders report being updated there. You do have also positions for silver, where it is updated there. You can also look at platinum and palladium. Let's take, for example, you trade currencies. You can also look at positioning of currencies. If you head over to, once again, the CFTC, which is the Commodities Futures and Trading Commission. But now for currencies, you would want to go down to current traders in financial futures report. If you do click on the long format, it is going to take you to a new tab whereby now you have an opportunity to look at this information. Now, the asset that I would want to pay attention to is going to be Japanese yen. Why Japanese yen? Because we have been paying attention to the Japanese yen for quite some time as a result of price action. Now, let's take, for example, the changes from 21st of April to 28th of April. We did see under the asset managers. Now, for currencies, you pay attention to the asset managers and institutions. These are the biggest speculators in terms of currencies. We can see there's a net long of 66,000 and net short of 93,000, meaning in the long run, institutions are favoring selling the Japanese yen more. If we reflect on the changes, we did see institutions adding 17,000 net short positions, while at the same time they did add only 5,000 positions on longs. But if we reflect on a chart of USD JPY, very interesting price action. And also, if you do have any asset that you'll want me to look into, kindly put it in the chat section. I'll be glad to digest it for you. Now, pulling up dollar yen, this is a particular asset that we have been paying attention for more than 4 weeks right now. And we did identify that 160 mark is the line in the sand for the US dollar against the Japanese yen. Why do we say so? If I can reflect on the daily time frame, scroll back onto my charts, we can see that around April, very interesting, around April of 2024, we did see prices tapping into 160 mark on USD JPY, and then we did have selling in the markets. Now, prices did come back into that region on July of 2024, where it once again tapped into the 160 mark. And then for the next, if I can just put it into perspective, for the next 47 trading days, USD JPY moved more than 13% to the downside. Now, prices came back once again into the 160 mark territory. This would have been on January of 2025, where now we did see also prices of USD JPY tap into 160, close to 160, and then for the next 22 trading days, prices did sell off by more than 11.92%. Now, we are seeing the same pattern happening in the markets right now, where prices of USD JPY was lingering around the 160 mark for quite some time. If you look at these sessions here, we have been consolidating around the 160 mark. Now, prices did tap into 160.5 on USD JPY. Then last week, on this would have been on when this would have been on Thursday, we did see prices of USD JPY aggressively move to the downside. This was close to 3.23% against the dollar. Now, why is 160 mark very important on USD JPY? We have to look at first the Japanese economy. Now, they are big on exports, meaning they do thrive better if the Japanese yen is weaker. Let's take, for example, you are to go buy a vehicle from Japan. If you are converting your local currencies to the Japanese yen, you are going to use less of your currencies. But if they do convert it into the Japanese yen, it is going to be a lot of currencies as a result. But if exports are being favored, it means imports are also going to be affected. Why? Because let's take, for example, someone in Japan, if they were to buy something from outside of the country, then they are going to require a lot of Japanese yen. Now, the Bank of Japan is the body which is in charge of maintaining a balance between now the exports and imports. Usually, when we see prices heading into the 160 mark, we see Bank of Japan intervening. Now, they don't mention it publicly. We see it as a result of price action. Now, analysts are speculating that from this particular high still where we are right now at the moment, Bank of Japan is injecting cash into the economy. In close, we are looking at estimates between 32 and 35 billion dollars. And as you can reflect on price action that we are looking at the moment, you can see massive impulses to the downside, whereby we have very large impulsive bearish candlesticks to the downside. On Friday, we did see prices trying to correct, but immediately before Asian session did end, we did see aggressive selling in the markets. Today also, we did see aggressive selling in the market, signaling that yes, indeed, Bank of Japan currently at the moment is still continuing to intervene in the markets, hence stabilizing the Japanese yen. And potentially we could anticipate prices of, historically speaking, we have seen prices rally to the downside aggressively when Bank of Japan is intervening, and we are looking at more potential opportunities to the downside. Now, looking at price action, I would want to identify this region of support that is forming currently at the moment, whereby prices is now trading around the 155.5 mark, whereby these are the lows that have been tapped three times in the past three trading days. if we do happen to close below this region, have clear signs of sellers in the markets, I will consider looking at more shorting opportunities on USD JPY in the near future, potentially for prices to now fill in the imbalances that we have left out in the past. And the next region that I would want to pay attention to in the near future could be around 152.267 on USD against Japanese yen. I did see an inquiry of someone wanting me to look at gold, cloud. We can reflect on gold once again. Let me have a clearer chart. Beautiful. Now, we have been seeing gold rally to the upper side in the long time frame, in the higher time frames. This is on the daily perspective, whereby also once again reflecting on the commitment of traders report, we have seen that yes, indeed, net long positions are more than net short positions. But looking at the changes, which is the most important aspect, we are seeing institutions covering their net long positions, meaning they are signaling that indeed they are selling gold right now at the moment. Now, looking at price action, last month prices did open at 4,669. We did see signs of markets rallying to the upper side with the ongoing tensions between the United States and the Middle East. But clearly, after we did enter into earnings season, whereby now institutions and traders moved on to risk on assets because gold is not a yielding asset. Gold does not bear interest. And usually, when the markets are doing good, we usually see that gold either consolidates or moves to the downside. Now, looking at the first candlestick of the month, which is the month of May, whereby we did see sellers in the markets. Buyers tried to drive the markets further to the upper side, but the markets did close well below the opening price on 1st of May. Looking at Asian session currently as we do speak, we are seeing signs of sellers in the markets. But ladies and gentlemen, once again, as per the title of today's session, we shall be reflecting on non-farm payrolls. Now, last week was on 1st of Friday, was 1st of May, but because it was a holiday in a celebration of Labor Day, we didn't get non-farm payrolls, which was actually moved forward, and we shall be receiving the data actually this week. We shall be looking at how the employment situation in the United States is currently faring on. Now, usually NFP is a very volatile news release that traders pay attention to. Why? Because if more people are being employed in a particular economy, it means more salaries are going to be paid. It means consumers are going to spend, more dollars will be in circulation, and as a result, the dollar is anticipated to strengthen. But on the other hand, if we see people losing jobs in the United States of America, it means consumers are going to spend lesser, and more dollars will be lesser dollars will be in circulation, and as a result, you would anticipate the dollar to weaken, which when you're looking at XAU USD, you would anticipate it to move further to the upper side. Now, we were looking at this trend line whereby we are having the third touch here, but if we do happen to break below the trend line and prices comes and retests back into that region, I will consider looking at more shorting opportunities on XAU USD. Now, speaking of non-farm payroll, I would want to go back to um, the economic calendar, whereby HFM provides us with an economic calendar that you can be looking into. If you head over to Friday, which is going to be 8th of May, we do have NFP numbers coming out. And this is once again very, very important, whereby we shall be looking at the average hourly earnings coming out. There is no forecast at the moment, but the previous number does stand at 3.5%. And we shall be paying attention more to the non-farm payrolls for the month of April, where the previous number does stand at 178,000 jobs. Forecast is at currently at the moment, only 73,000 jobs are anticipated to be added onto the US economy in the previous month, which was the month of April. Now, if the data does come out greater than 73,000, it usually means that's positive for the economy, where you would anticipate volatility on the markets. But on the other hand, if the data does come out lesser than 73,000, then we would anticipate the dollar to weaken and volatility will be anticipated on the markets. Now, I did have more assets you wanted me to look into. James wants me to look at Euro USD, beautiful asset. Now, looking at euro against the dollar, let me zoom out my charts first. Let's reflect on what has been happening in the past. We have seen euro gaining against the United States dollar ever since mid last month on 16th, mid on March. This would have been on March. Prices now started making high highs, high lows, high highs. We do have a region of support forming at the moment as we do speak, but looking at the markets, we did have a change of character whereby now the markets did break the most recent high that was formed, and this would have been towards the end of April. If I can zoom in my charts to get a clearer understanding of the markets, whereby prices did tap onto the 200 period moving average. This would have been around the 1.17512 mark on 27th of last month. But once again, we did see prices rallying to the upper side. Now, looking at how Asian session has opened today, we are getting a bit of consolidation, which is usually normal, especially when the markets are waiting for major news release. In this particular case, we are going to be reflecting on the non-farm payrolls as the markets are now waiting for the data to come out and investors and traders position themselves accordingly. But looking at the moving averages, we did see prices now breaking above the 200. We did have a golden cross whereby now the 50 moved above the 200 and prices is trading above the 50 period moving average, signaling that yes, indeed, this massive impulse to the upper side could continue spilling over to this particular week. And once again, if the data does come out negative for the dollar, you would anticipate euro USD to move further to the upper side. But on the other hand, come Friday, if the data does come out positive for the dollar, then you would anticipate euro USD to continue moving further to the downside. Lil Dante, we have just digested the USD JPY, but remember once again, these sessions are usually recorded, updated to our YouTube channel. You have an opportunity to revisit the morning market calls as many times as possible. Now, if you have any other asset that you would want me to look into, kindly put it in the chat section. But I would want to reflect on the dollar index at the moment. Now, let's wait for the chart to update itself. We have been seeing a strength on the USD index for quite some time. And when you look at most of the assets, they were doing well. The dollar was doing well against most of the currencies when the dollar index was rallying to the upper side. But this particular price action here is the same as USD JPY. When you look at USD JPY, you can see the massive impulse to the downside is the same with the dollar index, whereby when USD JPY moved aggressively to the downside, then we also saw that the dollar index moved to the downside. Why? Because when you look at the dollar index, it's a basket of the dollar. It's an asset. It's a chart that looks at the United States dollar against a basket of six currencies, which the Japanese yen also has a weight to it. When the Japanese yen does better, then we see the dollar index move to the downside. Hence, the dollar is anticipated to weaken. Now, looking at this price action, we did see prices moving well below the 200 period moving average. We did see now the 50 trading below the 200, and price action is well below the two moving averages, signaling that yes, indeed, there is selling momentum in the markets. And once again, if we do happen to break below, I would want to highlight this region on the dollar index. If you do break below 97.55, then I would anticipate the dollar to continue weakening further. Hence, when I'm looking at USD JPY, I would anticipate looking at more selling opportunities in the markets. Now, I do have Lil Dante wanting me to look at the Dow Jones Industrial Average, beautiful asset. Now, the Dow Jones, let's look at this price action once again. When the dollar weakens, we usually see the stock markets do better. Why? Because now the stock markets are going to yield higher as a result. It is currently earning season, whereby we shall be anticipating more companies to release their earnings. If you head over to the HFM economy calendar under the tools and education, we do have the earnings calendar. If you click on the earnings calendar, then it's going to show you a calendar of which stocks are we anticipating to release its earnings in the near future, whereby if you can reflect on today, Tyson Foods, it's going to release its earnings. But usually we want to pay attention to the big companies, especially the tech. I have seen Kingdom wants me to look at the NASDAQ also. When you look at AMD, AMD is part of the NASDAQ. We do anticipate them to release their earnings tomorrow after the market does close. We also do have BMW, Continental, and many more companies are releasing its earnings. Now, why am I showing you this information? This is because when you look at these companies constitute of the Nasdaq, they constitute of the S&P 500 and the Dow Jones Industrial Average. If these companies are posting better than anticipated earnings, then it means investors are going to have a positive outlook whereby they're going to invest much more back into this particular stock markets, which hence, when you look at the Dow Jones Industrial Average, we did see it move aggressively to the upper side. Now, this is very important to note when you're looking at the Dow Jones Industrial Average. We did tap into a region of resistance that was formed back on February. If you do happen to break above 45,862 mark on the Dow Jones Industrial Average, I would anticipate there is no reason why the prices of the Dow Jones should break the all-time highs around 50,519. But once again, looking at the daily time frame, we are seeing the Dow Jones aggressively move to the upper side as a result of the positive outlook on the stock markets in the United States, whereby if we reflect from the low prices to the high prices, prices has moved more than 3.16% to the upper side in the past two trading days. Asian session did open with a bit of consolidation, but if you do have this region of support holding during New York session, I will consider looking at more net long opportunities further to the upper side. Now, the Nasdaq has just made yet another all-time high today, trading above 27,800 mark, signaling that yes, indeed, you can see how the markets have been firing on all cylinders. Prices is trading well above the 200, prices is trading well above the 50 period moving average, massive impulse candles to the upper side, showing that yes, indeed, the stock markets is on a risk on sentiment currently as we do speak. And I would anticipate this momentum to continue spilling off for the month of May. Quite interesting, noting how the probabilities are being aligned right now as we do speak. Njoro, we have just looked at gold, but remember once again, these sessions has will be recorded and shall be updated. Annex, it has been a while also. Uh, we have gold. Okay. Now let's look at the Asian session. We have looked at the dollar index. We have looked at gold. We haven't looked at silver. We haven't looked at the silver markets. Now, reflecting on the charts of silver, starting on the daily time frame, whereby we did see prices aggressively move to the upper side. This was towards end of last year, early this year, but immediately we did see mechanical sell-offs in the markets, whereby institutions started covering their positions. The markets did change character, where now we are making lower lows, lower highs, lower lows, and potentially a lower high around the 81.9 mark on the silver metal. Reflecting on how the month has begun for May, we did see prices move to the upper side for silver, where prices did go up to the upper side slightly. This would have been on Friday. A slight correction. Prices did tap onto the 50 period moving average and massive impulse to the upper side. But currently, at the moment, as we do speak, we are seeing prices correcting. Now, looking at the sizes of the candlesticks, this is showing us that yes, indeed, we have massive correction whereby the sizes of the candlesticks now the body are smaller with larger shadows to the downside, signaling that yes, indeed, the markets could be in a period of indecision as we are anticipating NFP numbers to come out later this week. Now, the region I want to pay attention to will be 74.6 mark, whereby if you do happen to break below this region, I will anticipate prices of silver to continue moving further to the downside, potentially coming back to lows around the $70 an ounce mark in the near future. What's my bias for gold today? We have looked at gold right now at the moment. Remember, as traders, we do react to price action. We shall be reflecting on oncoming data. Remember, NFP is going to come out later this week. The stock markets are still continuing releasing their earnings, whereby right now at the moment we are looking at 15 to 18% of the companies have already released their earnings. We look at more companies are releasing earnings in the near future. Now, this is going to affect sentiment, but at the moment we are looking at a risk on sentiment in the markets, whereby looking at gold prices usually thrives as a result of uncertainty. Right now, we are seeing the uncertainty cool down. The tensions between the United States and the Middle East has cooled down significantly compared to the highs that we were seeing a few weeks ago. And usually, whenever there is a risk on sentiment in the markets, we usually see gold either consolidate or move to the downside. Valentine's, if you log in onto the HFM platform, we do have on the bottom right, you have an opportunity to reach out to the live customer support. Log in onto the HFM application, bottom right, then you shall see an option for support. Now, looking at more assets, I would want to reflect on oil. Oil is a very important asset that we have not looked into, but very vital. We did see oil prices tap into 100 and almost 112 mark, 100. Let me just be exact with it. We did see prices tap into 112. Yes, indeed, 112.56. This was last week on Thursday. And then we did see prices now starting to correct itself, changing character, making lower lows, lower highs, lower lows, lower highs. Now, we were looking at the United Arab Emirates last week. They did announce that they were going to exit OPEC. And very important. Why? Because when you look at the UAE, they are the third largest oil producer on the Middle East bloc. Why did they leave the OPEC? This is because OPEC usually has quotas on how they're supposed to sell their oil. They usually would want to keep limits on how much oil remains on the ground. If they do control how much oil comes out, then they can control oil prices. Now, recently, the United Arab Emirates have felt that indeed the OPEC restrictions are limiting their growth and they are going to exit OPEC. It did start to take effect on 1st of May, whereby from 1st of May, now they did exit OPEC. And once again, now how could this impact the markets in the near future? If UAE now floods the markets with the oil, there's a high probability they are going to lesser their prices, which means there is going to be more supply of oil. And potentially, this could affect prices of oil because the UAE is going to sell oil at a cheaper price. If this does happen in the near future, then we might see a situation whereby there's going to be a surplus of oil. Hence, oil prices could be anticipated to move further to the downside. Now, currently at the moment, we are trading at 103.93. We are still looking at recent developments on the Strait of Hormuz. If tensions still continue to escalate, then we might anticipate prices of oil moving further to the upper side. But currently, at the moment, as we do speak, oil prices could start correcting in the near future, potentially coming back down to regions that were normal territories, which was around the $60 a barrel in the near future. When that is a topic that no one knows, but in the near future, there is a possibility that oil prices could start correcting itself once again if UAE does flood the oil market with their cheaper oil in the near future. I have Kingdom wants me to look at the FTSE, the UK 100. I do believe you're somewhere here. Here you are. Now, let's look at the UK 100. Last week, we did have the MPC coming to the table. They did discuss of monetary policy. We did see them hold on to interest rates, but currently, let's just reflect on that data. We did mention what we want to pay attention to on the monetary policy is usually the voting, whereby what are they going to do in the near future? Once again, this information is available to us on the HFM platform. If I can reflect on last week, whereby you can reflect on data that has already passed, if you just click on this icon here, we did have the Monetary Policy Committee releasing their decision, and that was on Thursday. This would have been on 30th of April. It was exactly at 2 p.m., whereby looking at the votes, it is a 9-member committee. 8 members voted to leave the rates unchanged. 1 member voted to hike the interest rates. And currently, at the moment, as we do speak, interest rates is constant at 3.75%. Now, if usually interest rates are higher or maintained higher for longer, then it means the UK gilts, we can also trade gilts on the platform. Here it is. It usually means that the gilts fetch a higher price. If you look at it on the daily time frame, we have been moving to the downside. But if the MPC is going to the Bank of England is going to keep interest rates higher for longer, then we usually see the bond markets do better. And as a result, when you look at the stock markets, usually takes a beating. This is UK oil. We need to look at UK 100. Looking at UK 100 has been rallying to the upper side. Most of the stock markets globally have been doing well after this particular period here, and this was early 2025 when Trump did enact tariffs. The markets digested that data negatively, whereby they were looking at more costs being passed down to the consumer. But afterwards, we did see one of the best rallies on the UK 100. When you look at the FTSE, we did look at the best rally to the upper side. Now, looking at price action currently at the moment, we are in a very decisive period where if you look at last month, prices did open on this particular region, did close just shy above the opening price of last month, signaling that yes, indeed, there is indecision in the markets. We did see prices rallying to the upper side, then to the downside. We would want to see how prices on the month of May is going to fare on. But currently at the moment, we are seeing a doji candle, more of a hammer price action, more of a hammer pattern forming at the moment. And once again, I would want to keep at recent developments that is going to happen in the United Kingdom, potentially to make trade.
Okay, I do believe we are good. Yes, we are. Now, once again, we are looking at the demo contest each and every month. HFM offers you an opportunity to trade virtual to real. No risk involved. There is no monetary risk involved. If you do believe you have the skill, join the demo contest. If you happen to be on the leaderboard, number one shall be credited $500 onto their trading account. Number two shall be credited $300 onto their trading account, and number three shall be credited $100 into their live trading account. Once again, ladies and gentlemen, it is a competition. If you look at the month of March, we don't have May. Okay, for the month of April, it's not yet been updated, but for May, for the month of April, we don't have the updates yet, but for the month of May, we're already up and running. Look at this. Meshach is already up 2,000% on his account. We have Lewis Kenya up 1,700%. And then we have Caroline Nkatha up 305%. And this is the second trading day, considering we did start last week on Friday, which was fast. Today is the second trading day on the competition. We already have people firing on all cylinders. Meshach once again up 2,000%. If you do happen to be on the leaderboard, number 1, 2, and 3, they shall be credited onto their live account. That and many more promotions that HFM is offering under the bonuses and promotion segment. Ladies and gentlemen, my name is Ian Elkington, market analyst at HFM, and I shall see you when you do see me next. May the pips be with you. How do you join? You head over to the bonuses and promotion segment. We do have the demo contest here. You see here under the bonuses and promotion. So make sure you're on the promotion segment on the platform. Then you do have the demo contest. Click on demo contest and then just fill in your details. A new account is going to be created. So it's a specific demo trading account. Also, if you head over to your wallet, log in onto your wallet, under the demo accounts, you have an opportunity to scroll down. You do have the demo premium, the demo zero, and then you also do have the demo premium. Once again, if you scroll down, you have an opportunity to join that, and I shall see you at the top of the leaderboard. Ladies and gentlemen, I shall see you tomorrow when you do see me next.